Welcome to this special financial briefing. Europe is facing a day marked by social and political turmoil. In France, the streets are on fire once again, massive strikes, protests erupting in Paris and Marseille, and a government under unprecedented pressure. But France is not alone. In the United Kingdom, unions remain firm against the cost of living crisis, while in Germany, discontent grows over economic stagnation and soaring energy prices. Europe as a whole seems to be standing on shaky ground. Melvin, in the middle of this social storm, markets are sending a very clear signal. Tell us what is happening with global assets.
Charlotte, what we are witnessing today is historic. Gold has just broken every record, reaching levels never seen before. It has become the safe haven for investors and central banks during these uncertain times. The surge in reserve purchases across Asia and the Middle East confirms that we are in a race to secure protection against volatility. At the same time, the US dollar is collapsing at a pace not recorded in decades. Its weakness against major currencies is forcing markets to rapidly reconfigure positions. Large global funds are already reducing their exposure to the dollar while increasing their holdings in real assets such as precious metals and energy. In other words, we're looking at an explosive mix: social unrest in Europe, gold skyrocketing, and the dollar losing ground. If this scenario continues, we're not just talking about short-term instability, but the beginning of a global financial realignment that could shape the next decade. Now, Charlotte, let's hear from some French citizens we interviewed earlier, and also get additional reactions, aid a passing wave of unrest.
On principle, it seems pretty unfair to me. These are days intended for rest and enjoyment, off of work.
I understand the need to make cuts and find money, but there is absolutely no social justice in this plan.
I don't like the idea of leaving a lot of public debt for my kids. We have 2 war remembrance days. Why not just get rid of one in May? That seems appropriate to me.
Been interpreted as being more cautious, and this is probably confirming the paring back we've seen in bets about further rate cuts going forward in the year. So we had the August rate cut decision. We had this historic deadlock amongst the Monetary Policy Committee members.
Yeah.
So this was really, we wanted to kind of hear more comments about their thinking, about why certain members voted that way. So it was really interesting how there's a big focus on inflation, especially from some of the more hawkish members, such as Deputy Governor Claire Lombardelli and also from Megan Green. But again, the Bank of England's going to have to weigh this up with worries over growth and also the labour market, which first showed signs of softening, then showed signs of stabilising. There's been issues with data quality. So overall, it's a little bit of a confusing picture. So no wonder there's a bit of caution, but it seems to chime with market thinking now.
US revises job data down by 911,000, signaling a weaker labour market than previously estimated. Oil prices rise after OPEC Plus decides on a modest output increase amid concerns over Russian supply. Dollar falls to a 7-week low as expectations grow for Fed rate cuts. India's key stock indexes, Sensex and Nifty 50, climb following Infosys share buyback announcement and rallies in banking and consumer sectors. Anglo American agrees on a $53 billion mega merger with Tech Resources, creating a copper giant. Meanwhile, London faces transport chaos due to strikes. Apple, AAPL, on Tuesday unveiled its iPhone 17 lineup during an event at its headquarters in Cupertino, Calif, including its all-new iPhone Air. Apple's iPhone is its most important product, and major redesigns like the iPhone Air generally work to help power sales well into the year ahead. The change comes after years of what was more or less the same design styling across iPhone generations. E-mini S&P 500, the 25th of September, rises by 0.18%, to 6,518.00. Nasdaq 100, the 25th of September, rises by 0.23%, 23,855.00. 10-year T-note futures falls by 0.22%. Crude oil, the 25th of October, rises by 0.51%, 62.77. Natural gas, the 25th of October, rises by 0.94%, 3.1190. Gold, the 25th of December, falls by 0.22%, 3,675.00. Euro divided by 1.17, $4, negative 0.0053. USD divided by JPY, 147.454. O negative 0.0570. GBP divided by $1.3519, negative 0.0024. These tensions, combined with the historic surge in gold and the sharp decline of the dollar, could very well define the rules of the global economy for years to come. Investors, governments, and everyday citizens should be prepared for a world in transition. That's all for today's report. Thank you for watching, and we'll return now to the studio. Charlotte. To sum it up, what we are witnessing is not Jew.
Thank you, Melvin, for that powerful insight. And to all our viewers, if you want to stay informed with the latest financial updates and in-depth analysis, don't forget to subscribe to our channel. Hit the notification bell so you never miss a report. Together, we'll keep tracking the shifts that are shaping tomorrow's economy. That's all for today. Thank you for joining us, and we'll see you in the next update.